numbers, you would see that the only thing that has gone wrong, if you can call it going wrong with us, is with the utilization of capacity in the markets in which we operate and the prevailing prices. If you look at the numbers a little, I don't know whether you have our volume numbers, but in this quarter, we have sold over 1.2 million tons of cement, which if you look at our capacity of 5 million tons a year for this quarter, we've actually done 96% of capacity utilization. If you look at the volume sold throughout the year, they are in excess of 4.2 million tons, which is 84% capacity utilization for the year as a whole. So if you look at these numbers, obviously we've been selling very well, but the prices that are available to us in the markets that we operate in, which is primarily Andhra Pradesh and Maharashtra, they have actually degrown year on year by 7%. So when we say that the sales are down, it is not in terms of volumes. Volume, if we, let's say, take year on year same quarter, we actually have a 6% growth in the fourth quarter for the year. And if we look at year as a whole, we have grown by 3%, whereas the degrowth in the markets that we address, which are in, again, I'll repeat, Andhra Pradesh and Maharashtra, the markets have actually degrown by over 5%. So 1% degrowth that you, or little degrowth that you see in rupee terms is only in terms of the prices that we got. Otherwise, I think every other parameter, if we look at in terms of what we call manageable variables or controllable variables, every single thing we've done quite well.
I read a couple of reports which said that this could be the bottom in terms of cement pricing as well as in terms of the EBITDA performance for cement companies. What is your sense of, one, that statement, and two, how the next 12 months could look like for you as a company?
Well, I tend to agree with this hypothesis that this perhaps is the absolute bottom. We should start looking forward to improvements in the markets, both in terms of volumes in demand and also in terms of prices that the markets will have to carry. Let's remember that if you take the last two financial years, financial year 13 and financial year 14, in both the years prices have kept coming down. On the other hand, the entire industry has had to actually suffer the normal inflation in prices. We know coal prices are governed by the public sector organizations. Diesel prices, which are a major component of freight costs that we incur, that keeps going up. Power prices have been raised in Maharashtra by the electricity suppliers. So in terms of the industry as a whole, if you look at it, last 2 years, we've absorbed all the increase in costs and the prices have actually kept coming down. I don't think it can get any worse than this. So I certainly think that this is just about the bottom, and going on from here onwards, not just the industry, but we ourselves are looking at much better, let's say, not too much growth in terms of volumes, because as you know, when you're doing 96% of your capacity in a quarter, you are not looking forward to a major improvement in the volumes. But yes, the moment the pricing starts looking a little bit better, because the capacity utilization will go up, all of us are actually waiting for that. More importantly, let's not forget, in the recent past, the degrowths in volumes that we see in Andhra Pradesh has largely been a result of the dislocation in the markets post the announcement that Telangana is going to be formed. Everybody knows that the formalities need to be completed fairly quickly, hopefully post the elections in the next, hopefully 3 months or so. The moment these two separate states come into being and the projects get kicked off, in Andhra Pradesh specifically, we are expecting a significant jump in demand, and that should help every manufacturer of cement in Andhra Pradesh like ourselves.
So can we take those statements to assume that going forward we will see better margins, better top line growth? Can you give us some ballpark figures?
Frankly, as of now, ballpark figure, it'll be just putting a pie in the sky, because pricing wise it needs to improve, we know that. All we are now looking forward is a little bit of developments post the elections. If you look at April, just April month, we have seen a little bit of improvement in prices and demand. But to my mind, that's just tip of the iceberg. We see industry typically in the past has had EBITDA of 1,200 per ton or even more than that. This year we are talking more in the region of 700 to 800. Some companies not even that. I would forecast for the financial year that we started on 1st of April. All of us should at least look at the EBITDA of about 800 rupees a ton. That, to my mind, should be a fair EBITDA for the year that we are into now.
I presume that would come about as a result of price increases and not cost rationalization.
Largely yes, because in terms of price reductions, I think the industry in the last 2 years of very, very tight markets, all of us have worked. In fact, if you look at Orient Cement's performance, it's actually quite amazing that the price, if we just looked at the realization downfall and multiplied it by the volumes, our EBITDA and our profit after tax should have actually come down by a much larger amount. The only thing which has enabled us to post the results that we have posted has been our, I would call, a very effective management of our costs. Very significant, if we pick up two significant costs that hit any cement manufacturer. One is power and fuel. The second is freight. Now, on power and fuel for this year as a whole, we managed to contain the power and fuel cost almost at the same level as the previous year, despite the fact that the administered prices have actually gone up, which has come out of the efficiencies that we managed to achieve at our plant. So that's one area on power and fuel. On freight, actually, it's even better. On freight, despite the diesel price hikes, despite the railways having put out the freight, and despite our having moved larger volumes, our aggregate, our absolute terms freight cost this year is less than last year. So obviously on the cost side, we've been working very, very hard to reduce.
Mr. Khetarpal, please allow me to interrupt. Only doing this because I'm running extremely short of time. So you are answering in the positive, right? You're saying that there will be price increases.
Absolutely.
To the tune of how much, sir?
Like I said, if this year we are doing EBITDA of around under 500 tons rupees per ton, I'm talking about 800 rupees per ton.
Fine. I'm not that good at the cement business to figure out what kind of price increases would lead to that. So you're saying prices would go up by 10 to 15% over the next 3 to 6 months, despite the fact that it's monsoon season?
They need to go up purely because the industry can't keep absorbing these costs forever.
Okay, and for the year as a whole, you think prices can or need to go up by 20% or northwards of that? You think that's a possibility?
20% might be too ambitious. I would say up to, let's say, 8 to 10% is something that we would certainly be looking forward to.
And that alone would lead to an EBITDA jump from where you are currently to almost 800 odd per ton. You're saying that would happen? A 10% price increase?
Yeah. You see, currently our realization is in the region of, let's say, 3,300, 3,400. 10% takes it to about 3,600. All right. That's what, and that EBITDA aided by our better management of our costs will actually lead to, that will lead to the improvement in EBITDA cost, the total EBITDA per ton that we're talking about. So it largely, as I said earlier, will be coming out of the price increases. About 10% price increase seems necessary for the industry to keep doing what it is doing today. Okay. If it doesn't happen, it's going to hurt everyone, but I think all the pointers in the market would necessitate it to happen.
Point taken, Mr. Khetarpal. Thanks so much for taking time out and joining in with more perspective on your numbers as well as to where we can see prices. So may increase prices by 8 to 10% is what the management is indicating. The stock is a little muted as we speak. But let's take it straight to the European markets, and it's been a bit of a mixed start. You do have the FTSE mild negative